Monday, September 18th, 2017, and this is the Daily Report for Gold and Silver. Strong downside pressure in the precious metals markets, taking gold down about $13 on the day, settling at $13.1160. Silver also trading under the gun, down about 2.5% today, closing at $17.25, a net loss of about 45 cents on the day. That all in light of a stronger Dow, NASDAQ, and S&P, with the Dow Jones Industrial Average closing up 63 points, the NASDAQ at 64.52, and the Standard & Poor's at 25.03. Due to a combination of events today, we have seen the precious metals markets come under extreme pressure, losing a little over a full percentage point today, currently trading at 1310.80. This, of course, affected our current trade, in which we went long at 1332 with stops below 1318. We got in at 1332. We got stopped out at 1317 for a loss of $15 or $1,500 per contract. Our protective stop just below 1318, as it really matched the low that we saw last week. And so today's downside move through a critical area of support, our next levels that we need to look at, 1310, which is precisely where we see the market closing at today, and then below that about 1300. I initially believed that we wouldn't see the market go as low as 1300, and I still believe that that is not that likely unless there is some announcement by the Fed in which they raise interest rates or change the cap rate to the monthly liquidation of bonds, quantitative normalization that will get underway later on this week. And traders, even with today's sell-off, we are still in a wave 4, and when that concludes, we will see the market move up substantially. It will, of course, change our upside projection, basing our projection on the fact that wave 1 and wave 5 should be about equal in size, and the fact that it is starting at a lower price point than we looked at last week with our model will lower our upside target, which was at $1,400, to anywhere between $1,380 and $1,390, depending on when this current correction concludes. And traders, the entire precious metals complex, except for palladium, did trade sharply lower on the day, off about 0.9%, but it was silver that got hit the hardest, losing 2.5% of value today, plunging below 18 to close at 17.25 after selling off by about 44 cents. We are also looking at a 2-day chart on silver, and we can clearly see the 38% retracement level, which sits at 1710, and that matches up perfectly with the exact low of the day. So we closed just above that particular price point. But this, along with gold, did go right to a logical Fibonacci retracement point, and we want to see if the market can consolidate and find some sort of support here, or whether or not we see a further decline in both gold and silver prices. As a trader, I must acknowledge that it is a series of wins and losses, with the winning trades outperforming the losing trade that corresponds to a positive net result. In our opening letter today, there were two primary causes for today's sell-off. The first was the upcoming FOMC meeting, and the second and most predominant in the market has been this risk-on environment, which continues to fuel higher equity prices. We are looking at the Dow Jones Industrial Average. That closed up 63 points today to close at an all-time record high, 22,331. As long as we have investors channeling the majority of their investment funds into equities, we could see further bearish pressure on the precious metals markets. And traders, lastly, a quick look at the US dollar, and really what I am seeing here is an attempt to consolidate and form some sort of base off of the recent lows at 91. If that is the case, we could look for this market to have an upside bounce. Traders, as we spoke about during our technical studies portion of today's show, effective trading is a series of profits and losses in which your profits more than compensate for any kind of a loss. To accomplish that, you have to have successful risk and reward systematic approaches in place, and that's why we had our stop at such a tight place, giving up $15 on this particular trade, and this, of course, following a $30 gain. Our net result is still positive on the year, and inasmuch as we never like individual losses, we have to realize that is part of a successful trader's portfolio. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.